Yo, what's up, you guys? Welcome back to another weekly market breakdown. Today, I will be giving you guys an update on the DXY, Euro USD, GU, NZD USD, and USD CAD from both a technical and a fundamental perspective. I'll be doing another breakdown on indices, precious metals, and commodities tomorrow as well. If you are new here, a sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button. Also, if you want to learn more about reading fundamental data, news, and stuff like that, just go head over to the educational section there as well. Before we continue, let's go over some of the questions. Now, the questions probably would have ended here. Yeah, here we go. How does USD affect USD? I think I replied to your comment with that answer because it's like a long answer that I've given you there. And then Mr. Perrigan Taste is saying, had to close my buys on USD when you said if you're looking for buys, buy. And that is exactly what happened. The market did a U-turn. Mr. Hussein saying, LOKL, goodbye on US30. And then Nathan saying, good day, Mr. Rolio, can thank you for your breakdowns. Is it possible for you to create a Discord server where we can interact and see setups with the community? Follow your community that follows your channel, even if we have to pay to get access to that, we'll appreciate. I'm probably gonna do something like that for Discord probably later this year. I just need to understand how I'm going to structure it, and I'm going to put it where I'll share my trades that I take, and I'll give you guys access to my mentorship content, okay, and get some Q&As and all of that stuff in there. Mr. Cody Sang is saying, can you please analyze GBP USD? I'm sure you mean GBP USD, but I do have it on watch list, so no problem. Guys, that's it. If you have any questions, please drop them down in the comment section below, and I will answer them in the next video. First thing we're all going to take a look at is some news that came through last week, and obviously see how that is going to filter into the new week. We had some negative PMI, flash PMI, manufacturing PMI, both came through negative. Unemployment claims is still lower, came through lower once again. Good to see. That means the job market's doing quite good. The University of Michigan consumer sentiment basically dropped, so their hopes for a recovery of the the market drop slightly. But the most important thing is the Jackson Hole Symposium and Jerome Powell. So Jerome Powell basically came out and he says that inflation is still too high, and warns that they have to be, the US citizens, I can't say we because I don't live there, but they have to be prepared for further increase in interest rates. Now, in any indication that leads to higher interest rates is an indication for a stronger dollar, because when interest rates are increased, this normally attracts investors. The key points over here, it says, while acknowledging the progress that has been made, we've obviously seen the inflation drop month over month since last year. March has been dropping. That is the progress that they are making a reference to. The central bank leaders said inflation is still above where policymakers feel comfortable. It's like setting a target for yourself for the year, and then you say, we are getting closer to the year and we know we're close to it, and then you go, guys, it's fine, we can't do anything. We're gonna have to start going aggressive over here as well. It says here the speeds resembled remarks that Powell made last year at the Jackson Hole, during which he warned some pain was likely as the Fed continues its effort to pull runaway inflation back down to its 2% global, 2% goal. And that is why I say, even with inflation coming down, that doesn't mean that the Feds are less likely to hike their interest rates, because the target for the Fed is below 2%, and as long as the inflation is hovering above the 2%, the Feds are going to continue hiking that interest rates. How aggressively is dependent on how aggressively the inflation comes down. It says here, a strong economy and decelerating inflation also gives the Fed room to proceed carefully at upcoming meetings. And that is kind of the point that I'm trying to say, is that even with positive data coming through for inflation, even though inflation is slowly coming down, that gives the Fed kind of room to not go as aggressive as anticipated. However, these guys are full of tricks here as well. Now, because of that, gold drops after Powell leaves the door open for more interest rate hikes. And this is exactly how it works. Powell comes out and says, we're going to hike interest rates. The market goes scared. Anything that is negatively correlated against the index then tend to, drop below that. And that's obviously one of the reasons why gold dropped. But we anticipated this last week, Friday. It says here gold fell on Friday and route to snap 4 season streaks. But I'm going to go through this tomorrow, this specific article, because it's related to gold. Yeah, we're also going to go through that tomorrow. Today, I just want to go over currency pairs there as well. Now, before we continue, next week, we basically have some very important news. We've got the S&P Composite 20 HPI year over year. We've got consumer confidence, jolt openings. We've got NFP coming through there as well. So next week is going to be a very busy week for the market. It's also the last week of the month. Very, 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 very important. But I know some of you are still going to try and get in this. It's my time to sign. And that's good for you. Now, basically, every breakdown that we looked at last week, we're just going to do a quick update on there. Now, basically where we are standing now, I do expect a correction now, also known as a profit taking for the index. So going into next week, I'll probably expect the market to continue lower for the lateral part of the week. And then from there, having that positive NFP data purely based off the low unemployment claims is a good indication that the NFP, the non-farm rule, that the Feds probably have added more jobs, and that's further going to increase the strength of the index. And this is kind of where we want to get to for the first point, but a correction is expected now going into the new week, into this market here as well. Next up, we've got Euro USD. You can see Euro USD basically also gave us that candle that I said you had to wait for, that closed below. That is where we got it, and then the market continued this move to the downside. Going into the new week now, I do expect a correction on Euro USD. We got this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of this massive impulse, and we can see that we do have a 61.8 Fibonacci lining up perfectly with that previous resistance that is now acting as a level of support. Next up, we've got GBP USD. Then you can see this market also went exactly as anticipated. The market pulled back, like I said, printed an equal high, also tested previous resistance, previous support as resistance, started this move to the downside, broke below all of this structure. I do expect the pullback now and then a continuation to the downside, as we do anticipate and expect the dollar index to increase in value there as well. Again, going into next week, I do expect a pullback, and then from there, obviously, as we're moving closer towards the NFP data, we're probably going to see this continuation. There's still a lot of leg room for GBP USD to move to the downside. Next up, we have got NZD USD. Now, NZD USD printed what we can see here was an equal low. Market fell to close below the structure, so definitely going to expect a pullback to at least the 0.382. You can see the structure was played out very perfectly. The market printed support, broke below support, came back, tested it as resistance there as well. Now, obviously, as a general rule of thumb, where the market prints an impulse, you obviously expect a correction to at least the 0.382. And if you take your Fibonacci from the high to the low, what you do want to see is you want to wait for the market to pull back to at least the 0.382, which in this case is located at this level. I would say we could probably expect a deeper correction because of the pullback that is expected on DXY there as well. Next up, we've got USD CAD. USD CAD also moved exactly as anticipated. Market finally found some very strong resistance. Now, I do expect a pullback to at least this previous level of resistance that got broken, that is now acting as a level of support. So going into next week, I do expect this pullback, and then from there, we'll give you guys another update. We've got a lot of news coming through next week, so a lot of fundamental updates will come through for you guys next week as well. That's all from my side. Thank you for your time. Tomorrow we'll be dropping NASDAQ, US30, all of that stuff for you guys tomorrow in another breakdown. Thank you for your time. Enjoy the weekend. And as always, cheers for ears.